Today is Sunday, March the 1st, and this is the video for Friday, February the 28th. Look at the volume. What we've been saying since this coronavirus slide started is that the volume is serious. The selling volume is exceptionally high. But who's selling? People are moving out of mutual funds, so that's causing the mutual funds to have to liquidate some of their positions. The pundits, the pros are saying don't sell because you know the market's going to come back. At this point, it's too late to sell. If you had cash, you're in a good position. If you didn't have cash and you were fully invested, then you don't have a good position. The decliners led advancers by roughly 3-1. So it's the McClellan oscillator that we looked at in the video Thursday, and we'll look at a little bit more today in much more detail. And that's what we want to keep our eye on as an indicator of where the market might be going. But it's not going to happen with one data point in the McClellan oscillator, is it? So the stock advancers to decliners in the New York Stock Exchange, which McClellan uses, were again roughly 3-1, taking the McClellan oscillator down even further. Now remember, we are only looking at 1 year's worth of data, and in that 1 year, the market pretty much just went continuously up. There were some drops in the last 12 months, but you can see that the McClellan oscillator went into the oversold position a couple of times, 3-4 times, but nothing like this. So this is why we want to go and look at some historical data, which we're going to do right after we take a quick look at the charts. So the S&P bounced back towards the end of the day and didn't finish, yes it did, it finished higher than where it opened. So it opened here, moved down, and it finished higher. The VIX took a bit of a nosedive. That is interesting, and that's impressive. It doesn't, well, there was buying at the end of the day, but that could simply be the people that were short having to cover their positions and not wanting to be short on Monday morning. It would be a huge mistake to be short over the weekend, unless you had some information that said the coronavirus was going to get worse or there was going to be some other bad news coming. But without that information, it's just not a smart thing to do. So when we see this kind of buying right in the last 10 to 15 minutes, this is typically people covering their short positions. This is not an enthusiasm to go and buy at this price. We saw the market rebound a little bit when the Fed said that they were ready to step in if the economy needed it as a result of the coronavirus, but that didn't last very long. It lasted all of a half an hour, and then the bears started selling again. So this is not buying for the sake of buying. This is buying for the sake of covering your short positions. Now let's go back and look at the S&P. Well below the 200, really now into deep oversold territory. Let's take the cloud off of the chart and let's take the, well, we're way out of the Bollinger Bands. They don't even come to play anymore. So Bollinger Bands are important. We are so far out of the Bollinger Bands that we have to have a snapback on Monday or Tuesday, but only to get back into the Bollinger Bands, and then it'll just, that's not a signal for a recovery. But let's look at the 200 moving average. The last time we lost the 200 moving average was in the fall of 2018, and we lost it significantly, and then we did this massive V-shaped complete turnaround. What we're looking at now is something very similar to this fall, but far steeper. So if you read sentimenttrader.com, and I encourage you to go to sentimenttrader.com right after this and read what he says about how often this type of a decline has happened since the year 1900. There are other occasions where this has happened, but not in an awfully long time. We're going to look at a couple of other instances in a second. The last one we're going to look at is Apple. You can also look at Microsoft because it had a big comeback in the day. In fact, I think I will look at Microsoft. But look at what Apple did. Apple bounced very cleanly off of the 200 EMA, and the volume was huge. We also saw a turn in the SMI that didn't happen just Friday. It actually started to turn on Thursday. The SMI hit the oversold and it started to turn. In spite of the prices still going down, the stochastic momentum indicator showed a turn up. But we're not finished with the long-term stochastic, but this is the point it dropped to the last time before turning around. So it doesn't mean it has to go clearly and cleanly into oversold territory for this one to turn around. But watch, when it does hit the bottom, it's likely may mean another cycle of the short up and down. This is the 12-day moving average before we see this one turn up, but that's going to be a huge buying opportunity. If you wanted to start nibbling at Apple on Monday, you could, and you should. If you normally buy 100 shares, you might buy 25 shares. And you would put your stop at the 200. If it goes below the 200, then that's clearly not a good sign. But Apple, for the long term, buying Apple at 255, or what is it now, 275 for the long term, is really a bargain, and I will absolutely be buying at least 25 or 50 shares on Monday. But there'll be an opportunity on Thursday or Friday to finish off that block trade of 100 because Apple will go down again. It's going to be very, very choppy. So now let's look at the McClellan oscillator. Now here is the data going back to 1960, and I've updated it with the current data right up until last Friday. And I've looked at 3 different areas. So first of all, let's look at, let's go here and move all the way down. Oh, that didn't, there we go. So here is all of the data. We've got an area that's hidden in here, and it shouldn't have been hidden. But you can see the McClellan oscillator all over the place, and you can see the market is really did take a pop, not this pop, but it started moving up in June 09. And I'm not showing the June 09 to 2018 data. I should have. Let me see. It doesn't matter. I'm going to show it to you in close up anyways. But look at the swings in the McClellan oscillator. Back in 2007, we got to minus 344. But we got to this point here, and we moved up for a few days, and then came back down. No, we didn't. We moved down and then came back up. So we had 2 days, very similar to the last 2 days, Thursday and Friday, and then we started to move back up. Here, similar to here, we had this 1, 2, 3, 4, 5 days, and we started to move back up. Just like here, 1, 2, 3, 4, 5 days. There's a very high likelihood of a bounce up on Monday, but it doesn't mean anything for the long term. Let's take a look at 2007 to 2020. So, in fact, let's just look at 2007. 2007, this was the big financial debacle, and we know that the market was running up around 1400, the Dow Jones, and then started a very long slide. So this is October of 2007, and it hit its bottom in March of 2009 with that famous 666 in the Dow Jones. And then it started to move up. So what did we see on the way down? Maybe it's better just to watch from here, August of 08 down to March of 09. Look at this. We saw the McClellan oscillator show strength here, less strength there, less strength here, less strength. So there was this bears are in charge, driving the complex structure above the zero line, now below the zero line, where we had another complex structure, and we stayed below the zero line from September of 08 until October. So a full month we were below the neutral line, a full month. In the final drop, final leg of the market going down after a brief lull that got people thinking, hey, the market's strong again. Look at all the money moving into the market. We had this complex structure again where the bulls were in charge, higher, 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 and then the bears swept in. Was there any bad news at that point? Was it Lehman? I don't know what happened that particular day, but look at what happened. More complex structures below the zero line that went from January 09, couple of days over, February of 09, and we didn't come above the zero line until March of 09. Another 1 month. So this is a month we were below the zero line, and this is a month where we were below the zero line. And then the market started to move up in spite of having McClellan come down towards the summer of 09. We know what happened, and the market kept moving up. Let's look at 2020. The difference between 2020 and other years is that the market is at an all-time high, and the reversal was rapid. We see the typical up and down movement on either side of the zero line, but if you look at the number of points that are below the zero line in oversold as opposed to the number of points that are overbought, here's the overbought line, and we only have this small cluster of days in December, late November and December. We can almost ignore these because there's only 4 days there, but it was in December and January. After that, look at the number of days that are in the bear territory, in the oversold territory, a lot. That should have prepared us, and we've been talking about, market pullback was inevitable. Well, we certainly saw it in the number of days that the McClellan oscillator was spending below the neutral line, far more than it was spending above the neutral line. And if we see the deeply oversold, look at all the points in the deeply oversold. Look at all the points in the highly overbought, almost none before there's a correction. So we've seen this drop. This is the steepest drop of recent memory. But now let's look and see if there have been any worse. 408 is where we closed on Friday. And if we look back, we have 421 on October of 2008. And there was a slight bounce after that, but still a decline. So the signs you're going to be looking for to buy are when let's get back to our chart here. We're going to be looking for the S&P to recapture the 200. That's extremely important. We may see it move back up to the 200 SMA, but until it spends a couple of days above the 200 SMA, it's not going to be the time to be jumping in. You're also going to be looking at the news about the coronavirus and see what people are saying about that. So it's not only the charts now, it's also the coronavirus. But since we're chart people, we'll look at the charts. Sorry, I'm going on too long now, well past 10 minutes. So I'm going to wrap it up by saying Apple, opportunity to buy because it's bounced off the 200. Whatever you buy, just sell it if it falls below the 200. Don't be brave and hold on to it. Caterpillar has filled that gap very cleanly on Monday. So we're closing that gap. And we're looking at another gap up here at 135. It's going to take a while to get there. We are way below the 200, and we've got a bearish 50 coming soon to cross over the 200. This was sizable volume, but it's still not time to buy Caterpillar. I wouldn't even buy 25 shares of Caterpillar. Not yet. It may seem like a deal at 126, but I'd like to see 130. Shopify had a good day, but I'm not going to spend too much time on that one. Amazon, below the 200, but generally support at the bottom of the cloud. That's a good sign. Look at the Chiku span. It lost and ended up right underneath this candle. That's not good news for Amazon. Amazon is telling us that it could be getting resistance from this candle and moving further lower. I wouldn't be buying it right now either. Now I want to point out something that someone said on the YouTube comments page. Zach, go into the comments for Friday. He's talking about the accumulation distribution on the 1 year, 1 day graph. This is very important stuff. Accumulation, distribution, ups and downs, and the volume. He's making money off some VIX calls. So he bought the VIX calls. So he was looking for the VIX to increase, and it happened so quickly he made a killing. Now he's switching to puts, which is just what we're talking about. This may be the opportunity to see the VIX pull down a little bit because it's so high. But what can happen, as we saw back in 2018, is it'll pull back dramatically and then shoot up again. So he's going to be buying puts. Very good move. It'll be the type of move where he'll be able to profit very quickly, and he doesn't want to stay in that trade for too long because we are going to see this kind of nervous chatter and volatility before it gets any better. If we look at the 1 week and we look at 2008, we saw it come down, but then chatter all the way down, and then in 2010 pop up again. So the VIX is a great vehicle to play with calls and puts. I haven't personally done it, but it looks like it's a wonderful thing to be doing right now.